afternoon, everybody, and welcome to this next session at COP28. My name's Simon Jessup, Sustainable Finance Editor for Reuters. It gives me great pleasure to introduce my guests for today, starting from my right, Bo Lee, IMF Deputy Managing Director, Kampeta Sayinzoga, Development Bank of Rwanda CEO, Philip Jennings, IMF Executive Director, Jay Collins, City Vice Chairman, and soon to be joined by Nigel Clark, Jamaica's Finance Minister. Welcome, everybody, and thanks for coming. So what are we here to discuss today? Climate finance is clearly the major theme, or one of the major themes at this COP28. We all know not enough money's flowing. One of the ways it is starting to flow, however, is through the IMF's Resilience and Sustainability Trust, 1 year old, more or less. So we're here to talk about that, successes, where we go from here. Just for those of you who don't know, it provides long-term concessional financing to low and middle-income countries to help with climate adaptation and mitigation costs. So far, the IMF has approved around $4.4 billion to 11 countries in RST funding, and on Friday, the UAE announced a $200 million pledge to the RST. I look forward to hearing from each panelist about their views on the RST from their own distinct vantage point, and it gives me great pleasure, Bo, to ask you the first question. A year on, how's it been? How successful has it been, and how happy are you with the progress so far?
Thank you. I think this past year has been a very good learning experience, both for the fund and also for many of our partners, including our member countries. I think let me highlight two things for now. One is that we see very strong demand on RST. When we started to design this thing like two years ago, we didn't know how much demand there will be. But now we see very strong demand. As you mentioned, we have already approved 11 countries within the first year of operation. And we have more than 30 countries in waiting. So our expectation now is that in the next 3 to 5 years, we will probably have a total of something between 40 to 50 countries that are receiving support from this RST. Very strong demand. That shows that more and more countries are considering seriously to how to deal with climate challenges from a long-term perspective, and this is a long-term instrument. So that's the first thing we learned. The second thing we learned is that RST has the potential, it's a very powerful platform for us to bring together policy reforms, capacity building, and also financing innovation. So in the past year, we have been working with a number of partners, both in the public sector and the private sector, MDBs, DFIs, national governments, but also private sector like, Jay's Citibank, to think creatively how to work together in the context of RST. Because RST is not only bringing money, we're also bringing policy reforms. We are supporting the country who received the funding to put together a policy environment that can be conducive for climate transition, but also conducive for climate finance. So we are helping countries. We are working together with MDBs, DFIs, and other partners to help a country to reform, to put together a policy package that will help the country to deal with climate challenge. In terms of capacity building, again, RST is not only bringing money, we are also bringing our partners to think together, how can we help the country to build capacity, both from a project level capacity, but also at the macro level, we are helping the country to think about green budgeting, green public financial management, etc., to incorporate climate into their macro framework. That's our CD products. So we are working with our partners. We work from the macro side, incorporating climate into the macro framework, but also MDBs are helping the country to prepare a pipeline of projects so that they can scale up climate finance. And finally, in terms of financing innovation, we're also working together with our partners to think about how to have innovative arrangements to help de-risk for private capital to come in. And so far, we have some success. We have, as you have seen probably in the last couple of days, we have several press releases on Bangladesh, on Jamaica, on Costa Rica, and on Rwanda. We are having some initial success in terms of crowding private capital into climate finance. I stop here for now.
Thank you very much. Competitor, could we go to you? I mean, clearly this isn't free money with no strings attached. It does come with a requirement for everyone to get around the table and agree a set of reforms. Could you maybe talk about the experience in Rwanda and how that's been?
Well, Rwanda started with a very clear plan. We're one of the first countries to have an NDC, and the NDC had very clear targets for 2030. So when the IMF came to talk to our government about the RST, it was a no-brainer. It ticked so many boxes, as Mr. Boli has mentioned. One, we were already committed to reforms, but through the RST, we managed to have clarity on sequencing the reform, prioritizing the reform, and having the capacity support to implement them. Second, of course, we can't avoid talking about it's extra cash in Treasury. So it is a boost to be able to implement some of the projects that are key to government. And number three, which is the one I really want to talk about, is the leveraging and signaling of RST. As the Deputy Managing Director has mentioned, it's more than money. It's actually bringing partners to the table. And under his direct leadership, I mean, we literally had weekly calls with Mr. Boli to make sure that we're able to bring partners to understand the agenda, to understand the policy reforms, and avail a pot of money that would be key to actually allow the private sector, or empower the private sector of Rwanda to actually join the climate agenda. And we had designed a very innovative product, which is called Ireme Invest. And it's a facility that helps our private sector to have access to project preparation money, which are very concessional, have access to credit, have access to partial credit guarantees. So it's kind of a one-stop center for the private sector to be able to chip in. Now, with the signaling of RST, we managed to crowd in an additional $300 million from the private sector and from the partners. And we talk about partners from all over, from Team Europe, from the World Bank. We all work together around this very important program. Now, the beauty of it is with that kind of leverage ratio, which would be 1 to 5, of course, the government also committed $40 million. So there was a very strong anchor point from the government. We, as a development bank, are now responsible for spending this money or investing this money with the private sector so that we can see the kind of change that we want to see on the ground. But this time, not focusing on public resources, but really focusing on unlocking private resources at the base, which is Rwanda. And last year, we've had so much happening, but I think the one common theme that is very exciting is that a lot is now happening to unlock financing for the private sector and by the private sector. So I would say this is the power of RST beyond just a classical program to actually bring everybody to the table very concretely. So the reason why we had 2 press releases is the first press release was a commitment in Paris by all these partners, and the second press release now in Dubai is they've actually delivered. So this press release is about action. Things have happened. So we're not doing a second commitment press release. We're now reporting what has actually happened on the ground for Rwanda.
Thank you. I'd love to come back to the private sector's role and the multiplier effect. I think both really important. But before we do that, Nigel, could I jump to you? We'd love to, 2 different countries, different sides of the world. Could you maybe talk through your experience with the RST, why you got involved with it?
Am I?
Yes.
Yeah, okay. Yeah. Yeah, so the RST is a very compelling instrument from a number of perspectives. One of the perspectives is certainly the financial element of it. It is unlike anything that the fund has ever put forward before, a 20-year funding with a 10.5-year moratorium, concessional financing, which Jamaica would not normally qualify for, and therefore the financial package in the context of rising interest rates is certainly very compelling. But outside of that, the RST has the potential to play a catalytic role in crowding in other private investment. And as Bo mentioned, it's a policy-based loan where Jamaica has agreed to implement reforms that are pretty much in keeping with the direction that we're headed in, but putting them in a coherent framework that can be, if I may say, marketed or can be promoted as increasing Jamaica's sort of ability in the sort of climate finance and green space. And under the RST, we've been able to pursue a number of beneficial reforms. One of them creating a natural disaster fund in our sort of policy toolkit to provide fiscal resources in the event of a natural disaster, providing a green and climate lens. Hi,
I think we've lost.
a
Nigel,
green.
Lost you.
Huh?
Have we lost you on?
Yeah, I don't know. Yeah. So, 1, 2. So 1, 2.
Almost.
1, 2. 1, 2, 1, 2, 1, 2. I bet you if I start to sing, it will come back on. I told you.
Yeah.
I told you. Right, so we have managed to implement a coherent set of reforms, providing a green and climate lens to our public investment process, so overlaying that to make sure that public investments that come through take those into consideration, updates in our PPP legislative framework to ensure that the PPPs that emerge have a climate and sort of green lens. And very importantly, one that we are still developing is putting in place the infrastructure in our local capital markets for the issue of green securities, green bonds, and possibly even blue bonds. Having a very clear and coherent taxonomy for those issuances in Jamaica, and that will be the first sort of place in the Caribbean region, in the Caribbean and Central America, where you can issue green bonds. So you're talking about path-breaking initiatives and policy changes that moves the agenda forward, again, through the RST. And later on, we can talk about the kind of crowding in that we hope to have of private investment from the RST. But I'll leave that for later.
Thank you. Actually, it's probably a good time to bring in Jay from the private sector position. Blended finance, big theme at this COP. Private sector needs to get involved. There's not enough money in the public kitty. How do you view the RST? What can the private sector do to get involved?
Sure. Can you hear me okay? Perfect. So let me build on a little bit what Nigel and Bo said. I think first of all it's extraordinarily innovative in a number of ways. And the first, probably most important that hasn't been mentioned is it's using the SDRs. And not only is it therefore innovative in terms of what we can do with SDRs and how to think about it, but it's passing on the benefits, as the minister said, of that SDR structure onto the sovereign, meaning that very long duration, very deeply concessional financing, without which you couldn't accomplish a lot of this. I think it's also critical in terms of its flexibility. If you look at the policy element of this, it's a sweeping array of mitigation, adaptation, enabling environment. Let's think of it that way, right? This isn't catalytic capital into a project the way we would think about of MDB capital. This is actually the base layer of all investment, which is everything that needs to happen in the policy space, the PFM, the PIM, the budget tagging, everything that one would do to really dive deep into SLR and fundamental challenges unique to each country that need to be dealt with to then lay that groundwork to say, okay, project base can be built on top of that. So I think it's, if you really look at the array of this policy advice, it's innovative and it's broad-based, and it's exactly what the doctor ordered for our current climate crisis and world. And then last point, I think, is that if you look at what we need now in the adaptation space, there's just not enough adaptation money. And so you've got a tool here that can supercharge what is often neglected. And we're just not going to get the private sector mobilized and crowded in to the adaptation space. And a lot of what has to be done now is policy domain work to make sure that we don't wait too long, because when we become uninsurable, we're unbankable and uninvestable. And so to be able to deploy quickly some of this money very specifically, and also, what I love, and we talked a little bit about this, is it's now a framework for the policy conditionality of the programs themselves, right? I don't have a whole nother track of that. I can simply go back, look at the program and say, this now fits with the new fund thought process of programmatic climate change. And as I think about the NDC policy world, I think about where I'm going. I have a program, I don't have a separate process, and I've built in funding RST connectivity back to that. So I couldn't be, and Citi couldn't be, more happy with what we're seeing in the early days, and all we hope is that we can scale it.
Thank you. Philip, the plumbing, it was a big theme at Sharm, it's been a big theme at COPs for a couple of years. You deal a lot with vulnerable states, low island states. Do they have the time to fix the plumbing? They need help now. Could you maybe talk a bit about how really vulnerable states can benefit from this particular structure?
Sure. Yep, I'd be happy to. So just to mention that I represent 12 countries on the board and the executive board at the IMF. So I have a couple of them that would traditionally be viewed as donors for climate finance. That's Canada and Ireland. And others that will be beneficiaries, and that's 10 Caribbean countries that I represent on the executive board. And so I'll kind of, in some ways, frame it from that perspective of how the RST really is unique in the sense that it works very well for the donor side as well as the beneficiary side. So Bo already spoke to the high demand, but what's also been an impressive is that the amount of donors that have how much we've raised so quickly. So $40 billion, kind of a new source of funds that was created. And the reason why we're able to do it that quickly is because we lowered substantially the financial cost to countries to donate through the RST. So by using special drawing rights from the IMF, which you just mentioned, you're essentially costing countries about 2% of what a grant would cost, and you're still creating a tool that is concessional and interesting for countries to access. So you're creating a tool that works for donors, works for recipients, and you're creating a sort of a new pool of funds. Second thing, which I think is very important, in particular for the question you're asking about vulnerable states, is it was a key design feature right from the beginning of when the concept of the RST first came about, is that we had to ensure we developed a tool that was accessible to states that are most vulnerable to climate change. And in the Caribbean, it is the one region in the world that is by far the most impacted by climate's impacts in terms of the frequency and severity of the of climate events that occur there. So eligibility was broad to ensure that vulnerable states were brought in, and that can also be an attraction to donors. So for instance, for Canada, having the Caribbean eligible made it interesting, even more attractive in terms of donating through the RST, and that, I can say that's probably the same for many other donors. On the last part, which is important, is for small states, they do have capacity constraints which are quite important in terms of being able to really navigate the complexities of climate financing and how to access it. So the RST, and in some ways I'm picking up on what Bo said, it creates a platform for collaboration, where in essence you're able to kind of bring in through the RST is all the players that are active in the climate space. So regional, international agencies, the private sector, and working together to find what are the solutions that can work in those states, and you're helping and supporting the recipient countries in navigating the complexities so they can ultimately access more financing through that platform.
Thank you. So, Bo, if I could come back to you, I mean, I think we've seen a lot of big checks written so far at this COP, which has been obviously good to see, and no one could deny that. We equally have seen reports showing that the actual need is orders of magnitude higher. And without grumbling about the success of the RST so far, how can it be scaled up even more quickly? And how important is it that it gets more money in?
I think one of the theme of this COP is climate finance and how to crowd in private capital. As you know, as much as we have done, we know we are still far from the target, right? Because the target is people talking about $500 billion every year for developing country and emerging market from private sector. Right now we have only like around 30 billion a year, so we are less than 10% of our target. So there is still a long way to go. But there is no time, so we have to work faster. How to make that happen? I think several things need to happen. One thing is that we need to work together to construct the ecosystem. We need the ecosystem to crowd in private capital. And this ecosystem, as I already mentioned before, we need sound and coherent policy. So these countries, we need to help them to reform, to establish the proper policy for mitigation, proper policy for adaptation, and there has to be clarity, policy clarity, and policy coherence. The second is a pipeline project. We need to help them to build a pipeline project, a pipeline of bankable project that require technical assistance, that require capacity building. So that's why in many of these RST countries, we go there with our partner. We start with a PPF, a project preparation facility, because without a PPF, there won't be a pipeline, right? So we start with a PPF. The third thing that I think we should do in that ecosystem, in addition to the policy and the capacity, the pipeline, is that we need public sector to take more risk, because we are facing a gigantic market failure. So we cannot say, okay, the market will solve it. The market won't solve it. We need public sector to intervene. And one way for the public sector to intervene is that public sector should take more risk by providing the guarantee, by providing the first loss capital, by providing equity. We need more equity because there is already too much debt, right? Many developing countries, their debt level is already too high. So how can we help them to raise money? We need to give them more equity. And public sector, including MDBs, need to think about how to come up with equity and to help scale up. And the equity serves two purposes. The first purpose of equity is that they can reduce the amount of debt, right? The second purpose of equity is that equity will serve as a basis for scaling up. Because if there is equity, private sector will come in, right? So equity is the basis to leverage up. So that's why we need more equity, and public sector need to come up with that equity. Let's stop here.
Thank you. Jay, can I go to you as a representative of the private sector? What do you think about the MDB reforms we've seen so far? And precisely how much risk is the private sector willing to take on? Because if you look at the money that's gone into emerging markets so far, the answer seems to be not very much.
Well, first let me caveat what I'm going to say with the reforms are underway, and I think the world has gotten a message that we need to mobilize more. But it's clearly not enough. I mean, off the back of 80 billion of MDB money, we have maybe 17 billion of private sector mobilized money. If we need, say, 2.4 trillion a year for the MDC space, let's just do the math. If you take the adaptation monies, the loss and damage, the LICs and vulnerability kind of off the table, and you really just look for simplicity at, say, 600 billion of mitigation money that you're going to need, you're not going to get that by provisioning official money only. there are numbers that I've seen that we're going to need at least 4 times more of what for a 4-fold increase in the MDCs. And we're not fiscally, from the developed world, going to see a 4-fold increase of that funding, even with capital efficiency reform efforts. So I don't know if the multiplier in the mitigation space is 4 times, 5 times, but right now we're at fractions, not multiples. And so the tools, and I've written on this, City and our team has written extensively on the product reform and tool reform that we need to get there. And it's a whole of society approach, I guess, whole of economy approach. In other words, not just the MDBs, because as Bo rightfully said, the base layer, well, I talked about the enabling environment layer, not to confuse, but the base capital layer is equity. And if you can't get there with enough private sector equity, we're going to need more grants. Concessional lending alone just doesn't get you there. We're going to need multiples more of MEGA, right? The PRI, the BOC, the non-honoring, like without, and I mean multiples more. The guarantees is what gives the private sector that multiplier effect, not the concessional side. So we need all of those tools, and we're going to have to measure them. And actually, my call to the CEOs of the MDBs is to say, measure yourself by mobilization. Give yourself a mobilization rate and incentivize and be measured publicly by the world, because if you don't deliver that, we'll never get to say, Vera and Nick's $1 trillion of cross-border EMDC capital flows that we need to have without mandating that. And the private sector then, and we said this to the negotiators last night, you're not, the private sector aren't parties. So if you're going to rely on the private sector monies, which we need to crowd them in. And we are saying the regulators need to be in the room. Because the multilateral development banks right now have tools that do not work from a regulatory policy perspective. And so unless we can start to say, hey, why is it that regulatory capital returns just don't work? Or everything in the infrastructure space is punished hard by the Basel III regulatory framework, from duration, liquidity, to credit zip code. Unless we start to talk about that, we can't get there. So it's not all the MDB problem, but the MDBs are the conveners of choice. They're in the room, and they have to help us mobilize.
But just on the private sector, is it setting unfair requirements, unfair terms? Is it basically asking for...
Speak up a little, sorry.
Sorry, I was just curious if the private sector was setting unfair terms, effectively, asking for something that, of the emerging markets, that it's maybe unfair to ask. I don't know, is it being super cautious, too cautious? And what could unlock that? Is it gems?
Well, in some cases, so let me say 2 things. One is, we did the math on the GFANZ money, so call it $130 trillion. And if you look at it in terms of pension, fiduciary responsibility, Solvency II, insurance, regulatory requirements, and Basel III on the banks, you have a framework where the bulk of that money is restricted in some form, and you can push it to be more aggressive, to investment grade. And so when you do the math on how much of that really can play easily in single B, double B space, not only is it, let's say, single digit, but we looked in that single digit's already deployed. So you have to then look at what's the churn on that to see how much is really available. So unless we essentially risk enhance these structures to go up into that pot of that 130 trillion that just isn't going deep enough, we can't get it there. Now, one comment on GEMS, because I'm so glad you asked that. And so right now, the banking system is operating on on the back of poor and limited data, experiential data on lending, including project lending in the emerging markets. And if you have, PD data, if you have probability of default, if you have experiential lending data that is better than what the banks have, then we can lend off of it. Where does that sit? It all sits in GEMS right now. Can the private sector that everyone is criticizing for not doing enough see that data, please, so that we could say to the risk organizations, hey, wait a minute, the infrastructure, US is basically treating infrastructure, US regulators, as corporate exposure. Well, let's look at that. Let's look at the GEMS experience and say, that's messed up, because the difference between the experience in a BB project around the world with the MDBs in the GEMS data says X. I'm betting that the difference is huge. I don't know because I can't get the data.
Thanks. Nigel, could we come to you? I mean, one of the counter-arguments about releasing GEMS is its breach of confidence or secret data or whatever, but the data would be coming from a competitor as well, from your countries. Would you be happy to see this lending data publicly available so that everyone else could price risk better?
Okay, so just from my perspective, are we talking about public investment projects?
Yeah, I'm talking about the lending that the MDBs have done in your country and others that is currently proprietary, effectively, and shared amongst themselves, secret. Would you be happy to have that data shown to the world such that the private sector could price risk better?
Okay, let me approach it from just my perspective. We are actually working with some academics that have been empowered by the World Bank to take a look at public investment projects in Jamaica's public investment management system and to assess them for their sort of return possibilities with a view of making this data ultimately available to the private sector. The theory being that the private sector is often absent because information on the return possibilities just does not exist. It's a point I like to make from the other way around. I often found that the returns that investors can make on infrastructure investments in countries like ours tend to be much higher than people can make elsewhere. And that is simply because there are so few entities playing at the level, at the scale level of investment that's required for infrastructure in small countries. No, that's good and that's bad. That's bad for the country because we're giving up too much. But it's certainly good for those who have the foresight to look for these opportunities. So we're wanted to see if we can have a better win-win sort of situation by making data available on public investment projects and on the likelihood of those generating a competitive market return so that we can generate greater awareness of these opportunities, stimulate, hopefully, competition, and thereby, one, make the projects available so we can get investors, but importantly for us, we can, modify sort of returns on capital to be consistent with what they ought to be if there is full information.
Thank you. Campero, if I could turn to you, your experience in Rwanda, the Bridgetown Initiative, it unpacks a lot of this, doesn't it? The idea that the macro risk that the private sector in London or New York is baking in is just unfairly high, maybe because they don't have the data. What's your experience been engaging with the private sector in a local context in Rwanda?
In the local context, the private sector has raised, I would say, three main issues. The first one is really the technology risk, because a lot of the technologies that we need for the green transition are not particularly appropriate for countries like Rwanda. They're not developed for countries like Rwanda. So there is a cost of adapting the technology, understanding the technology. Recently, we tried to do a large e-mobility deal around electric buses. And Rwanda is a very hilly country, and getting the right type of electric buses that can handle our hills is a real issue. So the first one is definitely having the appropriate technology. The second one is the issue that was raised by the minister from Jamaica, which is access to information. How do you access information about projects that have never been done in the region? If you want to be the first, you're indeed the first, so you don't have a historical track record to do what you want to do. And then the third one, which is part of the Bridgetown initiative, is really the pricing of money at the moment. And we have to discuss pricing, because when we talk about scaling up, sometimes we use very big words, but for the private sector of our countries, the pricing is a big impediment. So this is something that we've tried to address through IDEME Invest, the facility that I've discussed, to try to see how can we use the concession of funds to actually pass on the concessionality to the local private sector. Now, when we look at the future, we also want to make sure that the private sector has access to opportunities at scale. And a couple of things are being done to support the private sector to scale up more in the years to come. The first one is Rwanda is now ready to have its first taxonomy, hopefully by next year, which will be a platform to issue green bonds, to issue more aggressive instruments in terms of the green transition. So the taxonomy is going to play a very big role in making this happen. The second one, which is something that the private sector has also asked for, is to actually have a carbon trading platform and a registry, so that as they invest in green assets, they're also able to reap the benefits at the right price for these green assets that are being built. And we're very pleased to announce that actually at this COP, we're able to launch our first carbon trading framework. And I think that is going to be pivotal to make sure that hopefully, if there's an agreement around the carbon trading environment at the global level, Rwanda can be one of the first countries to be able to benefit from that. And then the third thing, which has also been requested by the private sector, is really sector coherence. We also talk about the policy environment, but if we want to really scale, then we need to have a programmatic approach. And the government has been working with the IFC, actually, to develop an investment plan, but that ensures sector coherence, at large scale. So I think these are the building blocks that hopefully will be able to unlock a lot of the solutions for the private sector going forward.
Thank you. Philip, if I could, conscious of time, probably give the last question to you, if I may. We've spoken a lot, we've spoken about in a Jamaican context, in a Rwandan context. What about the regional context? Given the climate imperative, given the need to scale money quickly, are there any benefits to expanding this concept, the structure, to a regional perspective?
Great. I guess I start off by just recognizing the reality that we're in, which is, as I mentioned already, just the massive gap between the needs and what's available in terms of climate financing. So from that context, I think it's very important to really just leave no stone unturned and to explore all the avenues where you can actually tap into what is a significant pool of private capital, which is there, but is not finding its way into climate financing, and in particular, not finding its way into small states, vulnerable states to climate change. So I actually do think that you have to, in some ways, kind of think about it in terms of, as a private investor, how do you make it easy for them to make that investment? And a regional arrangement can have the advantage of essentially reaching a scale. So at the end of the day, the due diligence required in terms of making that investment will be reduced, as opposed to having to make 50 due diligence for 50 projects. You do it with one fund. So that's one big advantage. Another advantage would really be, from a risk perspective, is really diversifying the risk in terms of country risk. So if you have multiple countries in their regional arrangements. And then the last thing I would say is, which I mentioned before on capacity, is I do think there's an advantage of regional arrangements in terms of really being able for countries to share technical knowledge, to be able to, at the end of the day, take advantage together of how they can better position themselves to access climate financing.
Great. Thank you, everybody. It's been a great session, and thanks, everyone, for joining us.
How are you, my friend?